Good evening and welcome to this live Ask Me Anything About Property Investing with myself, Saj Hussain. I'm here every Monday evening at 8:30 p.m. to answer your property investing questions. We have been running this for about a year now, so we're on episode number 53, would you believe? Episode 53 this evening. And I'm here for about half an hour really to answer your questions around investing in property. So whether you're new to property, just getting started, or you're somebody that's very experienced, I'm happy to take your questions and answer those for you. Now, I can't promise that I know everything there is to know about property, but I certainly have a lot of experience that I can share with you. A lot of different strategies I've done over the last 15 years that I've been involved in property. And usually what I do, I kind of collect my content and I put it onto YouTube. So we have 3 videos a week on YouTube, really, again, sharing my knowledge and experience with you to ultimately help you get further, faster in your property investing journey. So if you've got a question that you'd like me to answer, make sure you pop it into the comment section on whichever platform you're watching on. We're live on Facebook, YouTube, LinkedIn, Instagram, and Twitter. So whichever platform you're on, put it in the comment section. I'll do my very best to get that answered for you. So just before we get started with the questions, where are we in terms of the property market, the state of the market? Well, we are in a very interesting time still. Things are potentially going to be changing very soon. Today, the MPs were debating whether the stamp duty should be extended. The government is kind of fairly stage stump about it. They don't really said what they're going to do. Personally, I think they'll probably extend it. As we get closer to March, they'll probably extend it. They're not going to say too early if that's their intention, because it actually defeats the purpose of what they're trying to do, which is drive a huge amount of volume within terms of activity within the property market. And if they announce too early that actually they're going to extend it, it will take some of the pressure off the market. So if the stamp duty holiday doesn't end, rather if it does end at the end of March, as it is planned at the moment, and the furlough scheme comes to an end in April as well, that's when I think we'll start seeing a shift where the second half of this year we'll really start seeing some changes within the property space. So let's get started with the questions that we've got this evening. And as I said, I'll do my very best to answer those. If you've got a question for us, put it on whichever platform you've got, and we'll get started. Our first question, Shane on YouTube. Good afternoon, Saj. Love your channel. Kindly explain the process once planning permission is granted to convert a property or piece of land until the building works are completed and ready to use. Well, there's a number of different factors you need to consider here. Once you submit your planning application and it's been approved to build or create whatever it is that you're doing, you'll have some conditions most probably attached to it as well. And those conditions can vary between 1 or 2 or pages and pages of these conditions. And those conditions can be absolutely anything. This is where it's really important that you've got a great architect and a very competent planning consultant that's helping you and supporting you through this process, so they can really resolve a lot of these issues before planning's been approved, so you have less things to deal with afterwards. So typically it might be you need to get certain surveys done. It might be there's certain types of materials that need to be approved before you can start. And the conditions will also vary in terms of some of them might be pre-commencement. That means before you actually get started working on site, these are conditions that you're gonna have to deal with. And there might be certain surveys and reports, for instance. And then you might have pre-occupation conditions as well. So that means before somebody actually moves in and lives in the property, then there's certain things that need to be discharged. For example, there might be electric charging points need to be operational up and running before somebody can actually live in that property. So there's a number of things and factors that need to be considered. These are primarily put into the conditions that you'll have, and they're the things you need to look at. Now, sometimes you might have planning permission. I've seen this, unfortunately, where you've got planning approved for a particular project, but actually physically delivering it is very difficult to do. For instance, it might be access has to be arranged in a certain way, and that access is beyond your control. And so it means although planning permission exists to be able to build something, you can't actually physically get to it to be able to build it. So there can be many nuances like that as well. Now, planning and building out the ground is really not for the inexperienced, in the sense that you need some support and experience around you if you're doing it for the first time rather than just jumping into it head first. So I hope that helps. I hope that gives you a few tips there. Our next question is from Jamie on YouTube. Hi Saj, when calculating a refurb end value, if the asking price is too much and the property has been on the market for a long time but not been reduced, are there negotiating methods I can use? Of course. Now, if a property's been on the market, Jamie, let's say it's been on the market for quite some time, you've looked at the figures and you think, well, actually, I can't really make this work because by the time I've spent the money I need to on it, in terms of what its end value is going to be. It's either there's no profit in it or there's really no benefit in doing it. So that way, you can go back to the owner of the, or rather the agent that might be managing that sale, and talk to them about what is it that the owner is looking for, and why is it that the owner hasn't got something that they might be looking for in terms of an offer. Why haven't they received an acceptable offer? And there could be many reasons. And what you're trying to do is establish really what's important for that seller. What is it that they're looking for to be able to get this deal done? Now, sometimes it really is as simple as a case that they just want the highest possible price, or they've got a figure in their mind and they say this is what they want to achieve. And if they don't achieve that, they're not interested in selling. So there's no real desire or motivation on their part to be able to move on. Now, in that situation, it's exceptionally difficult to be able to try and get them to renegotiate because they're quite fixated in the price they want. That might be that that's what they've decided that they want, or other times it could be that that's what the agent has led them to believe that might be achieved or possible for that particular property. And then actually when they get it on the market, they find there isn't the level of interest they thought it was going to be at that particular price. Now, one other thing you can ask the agent is, when the property was listed, whose price was it? Was it the agent's price, or was it the seller that chose what price to go to the market at? And really what you're doing by asking a question like that is understanding, is it a price that the seller picked that they want, or was it really picked by the agent? Now, if it's stuck for a little while and it's not moving and they're not reducing the price, it's very likely it might be something that the owners asked for. Now, sometimes the owner might be motivated to sell. They're really keen to get a deal done, but they can't sell below a certain figure because there's other things that need to happen. It could be there's a certain level of debt that needs to be paid and cleared off the property. And so this is where you really need to do a little bit of digging. And it can be quite difficult when you're speaking through an agent, because it's not the sort of questions typically an estate agent would go off and ask the seller of a property. When you're trying to get to the bottom of what's going on, what's the situation, what's the circumstances for the seller, why are they not moving? And really what you're looking for is somebody that has some motivation, they're keen to get a deal done, and then see if there can be some flexibility there. Ideally, if the agent can see that they're not getting anywhere with this particular property, what you then do is ask to see if you can have a conversation with the owner with the agent present, so the agent doesn't feel like you're going to cut them out of the deal. So I hope that helps. I hope that gives you a few pointers there. So our next question is on Instagram. Khalid just posted it up for me. It's Trim. Will stamp duty extended? So I'm assuming what you're asking is stamp duty holiday going to be extended? That's briefly what I talked about earlier on, just before we got started. My personal view is I think it probably will. The MPs were debating it today, and the government haven't really said what their intentions are yet. And often these things tend to be announced more with budgets, when the budgets happen, as opposed to at any other time. So we won't really know what the government is thinking right now. But personally, I think they will extend. There's many people that believe it won't be extended, and that's it. And then we'll start seeing this slow reduction in the amount of support that the government is giving to the property market and generally the economy, and really wants to see it stand on its own 2 feet and see where it goes. I just believe that they've spent so much money in terms of supporting the economy, the market, and people, and particularly in property. They've kept the property market moving because they know how big of a contributor it is to the overall economy and all the related industries. Estate agents, letting agents, architects, tradespeople, people who supply building materials, all of these are connected and related, and there's so many industries that are connected to the property space, and all of these have been ticking along, moving along, even though many other businesses have been locked down and not been able to operate. I think it's unlikely they're just going to let all that fall off a cliff now and say, right, 31st of March, that's it, there's no more support, it's completely finished. So I believe there is still going to be some stimulation of the market that will happen. Really, it's artificially been inflated right now. That's why it's booming. I was speaking to somebody this morning and I was saying, look, we're in recessionary times right now, and we're in a crazy time, but the property market's booming. Why is that? Why is that happening? And that's because of all the support that's in place right now. And I just personally believe they're not just going to switch it off just like that. They're going to continue, and they're going to continue to provide that support. But let's see. None of us have a crystal ball. We'll find out in a few weeks what's happening there. So let's get our next question up. This is from a man on Facebook. Hey Saj, how would you value a property if there's no sold comparables in a 1 mile radius? So when we're doing comparables, what ultimately we're looking for similar properties to the one that we're trying to do due diligence on, and see what price they've sold at. And ideally, they've sold recently, they are close by in terms of distance, and they're the same style of property. And that gives you a good comparable to say, well, if that one sold for 100,000 and it's only 200 yards away and it sold 3 months ago, then it's very likely the one we're looking at is going to be a similar price. So the more comparables we have, the more confidence we have that actually it is going to be the figure that we're looking at. But the challenge is sometimes you don't have those comparables. You know, you could find a street where the last time a property was sold was 18 years ago. So how do you get a recent comparable? It's much, much more tricky to do that. Now, one of the things, the easiest thing to do is you extend the search radius. So rather than looking at a quarter mile, which is what you would probably do initially, within half mile, a mile. Now, I think you already mentioned within a mile that you're looking at that distance-wise. But if you are looking at we'll say within a mile distance, and you still can't find anything that's similar that you can compare to, one of the things that you find that the algorithm type valuations work, such as you'll see on Zoopla, Mouse Price, the way they work is they look at properties that were sold previously at the time they were last sold, and then they look at putting that through a formula of the percentage growth that's happened over time. And then what that means is they're able to come up with a number of what they think the property's worth. Now, personally speaking, I think they're fairly inaccurate methods of doing it, but it gives you some kind of indication rather than having no indication at all. Then the other thing that I would do as the method to be able to try and establish what's going on in terms of value is I would speak to local agents that are local in that market, that operate in that market and know that market. And I'll talk to them about this property that you're looking at, what's their view, or what they think it might be worth. You know, why do they think that? Because they'll be able to share their experience of the market to know that actually if a property did come up for sale in that area or on that street, this is probably where it would be. And they remember, these are all gauges of what we think it will be rather than an accurate figure, but it gives us a good starting point. So I hope that helps. I hope that gives you some pointers there, man. Our next question is from David on YouTube. Hi, Saj, great channel as always. Thanks. My question today is, where is the best area to invest about 20 to 30K into a HMO in the current climate? Now, 20 to 30K isn't a huge amount of money when you're talking about purchasing property. And if you think about, typically you'll be putting in about 25% of the purchase price as a deposit for your mortgage. So let's say you're looking at £100,000 property, or £25,000 that will go into the was 25,000 will go into your deposit. Then you've still got stamp duty to pay, even though it's at the lower rate right now. You've got transactional costs, your mortgage costs, listers costs, etc., and you'll be at a point where you'll have very little change out of £30,000, and then you'll most probably will have to do some work to make it compliant to be able to run as a HMO. You've got a fire doors, fire alarm, and you know, kitting it out, furniture, all the appliances and everything else. When you take all these things in consideration, you know, 30,000 is really not going to get you very far at all in terms of a purchase of a property to be able to run as a HMO. So it's mostly you're going to be looking at the very low value areas. The challenge with the low value areas is that you know, often you're not necessarily going to get the best quality tenants, potentially more problems there as well. Now, I know there are certain favorite towns people have up north where they like to go to buy cheaper properties, and because they're at a lower price, even after adding some value to be able to convert them to HMOs, you get great rental income. I'm not saying it doesn't work. Yes, it can work. It requires a lot more effort. It requires a lot more hands-on for you to be in those particular areas, as opposed to doing it, say, 100 miles away. And also realizing that actually is going to be a market where you're going to have more challenging tenants, potentially more voids, and potentially more maintenance as well. So they're just a few factors to think about. You know, my model tends to be buying at around the £250,000 mark. You know, 200 to 260, 270, that sort of range. If we can buy around there, we might do a big refurb, maybe £100,000. That's just my model. I'm not saying there's not any other ways. There's many different ways you can do this. And then we end up with a commercial valuation will be significantly higher, which means we can extract pretty much all, if not most, of that cash out of the deal. So I hope that gives you some pointers there. So the next question is also on YouTube. This is Will Green. Hi, Saj. I'm looking to buy a bungalow. We don't know whether to convert the garage into an extra bedroom or go up into the attic to add extra bedroom. What would you suggest is more effective? Well, really, it depends on quite a few factors there. One of the main ones will be what's going to be the cost of these conversions and changes that you want to do, whether you're going to go into the roof space or whether you want to use the garage or maybe even extend as it is at the back or to the side as well. So you've got to look at the cost of doing all these things. And secondly, it's a case of really what is it overall you're trying to achieve? Are you trying to push up the value because you want to create this fantastic property that you're looking to sell on for a profit? Or is it a property that you're looking to rent for the longer term? And really what you're doing is looking to increase its value, and we do the BRR where you buy, refurbish and refinance that particular property to pull the money back out. So you need to do the sums to see where is it going to work. How are these numbers going to stack up in terms of how much you're going to spend versus what's it going to be worth overall. And remember also there's some changes happening to the planning system. On a bungalow, you'd be able to get a one-story extension, i.e. if it's already a one-story building, another one-story extension of a similar style without full planning permission under permitted development. So you want to make sure you understand those particular options available to you as well and utilizing those. So you're not necessarily going down the full planning route and you're going a more easier option to be able to do this. But ultimately, it depends. What is it you're going to do with it? What's that going to be worth? How much is it going to cost you to do the conversion? And then decide which is going to be the right route to go. So our next question is from Phil on YouTube. Hi, I really love your channel and thanks to all the information you share. Would you advise in buying property outright or putting mortgages on them for single let rentals? So really this, Phil, does depend on your intentions for investing in property. Now, let's say, you know, you've got, say, £1 million to invest. You can go and buy 10 houses at £100,000 each. No mortgage on there. You've parked your cash. You're getting a return of rental income from them. And over a period of time, if you bought in the right places, you'll probably get significant capital growth, you know, in the longer term. That's generally the intention. Now, often what happens is people don't start with that sort of money. They start with a lot less money, and the property prices for the ones they purchase are a lot more than 100,000 as well. So depending on where you are, and you'll probably want to leverage that. By leveraging that, I mean you'll have some mortgages attached to that, which then means now you've got debt, you've got mortgages to pay. But overall, your profit that you're making on the properties will probably be not that different if you had gone and purchased them for cash. However, the advantage you've got by leveraging is over time, when these properties are worth significantly more, actually you've got more of these properties rather than, say, purchasing 10 with all your cash. You might have been able to purchase 20 or 30 of these properties. So when they all go up in value, even after paying the mortgages off, you end up with a lot more cash that you've ended up with, a lot more capital, a lot more equity that you've created within the property just by buying them in the right place and sitting on them and waiting and holding those properties for the long term. And of course, there's a risk appetite for risk as well. Some people prefer not to have debt. Some people want to minimize the debt that you have. And you could have a balance between the two. The balance being, for example, you might say only borrow on the properties at 60% loan to value, as opposed to the 75% that most investors do. That means you're sitting much more comfortable. You're not completely debt free on the properties, but you are what we call low gearing, using low gearing on those properties. So I hope that helps you with that. Let's get the next question up on the screen. Our next question will be up in a moment. Look, if you're enjoying this content, make sure you let me know that you're enjoying these. I've been running these every week pretty much for about a year. And the plan is to carry on doing these for now if you're finding value from them and if you're finding these useful. So I'm here for about half an hour every Monday, just sharing my knowledge and experience to help you. I've also got the YouTube channel where we've got 3 videos a week. Make sure you pop along to that. Have a look at some of those videos. You know, I'm sharing what I'm doing, the kind of projects I'm up to, and also sharing knowledge as well to help you with your property investing journey. So let's get that next question back up. This is from Jacob on LinkedIn. Hi, Saj. When researching a market, what key things do you look out for? I've been looking at age and salary demographics of my city. What else are you looking at? So these are really good starting points when you're trying to work out where to invest, what the demographics are like. So I would Google things like who lives in my area, get to know my area, up my street. These type of phrases I would Google and find the websites that give you the information, the demographics of the type of people that live there. And also you can find marketing data. Marketing data is when you get the big marketing companies that really that put together the demographics of the type of people that live in a certain area to be able to then sell that information to companies that want to go and market. So for example, if you've got companies that are marketing a credit card to those with poor credit scores or low credit history, they'll have done that selectively in a certain area based on the marketing data they've got, versus, for example, let's say you've got companies that might have fairly nice and expensive retirement homes, and they target affluent areas where they know people are higher earners, and maybe where they're retiring, they might be looking for one of these type of retirement homes. So really, this data is available, is at our fingertips, and this can help us to try and work out what type of people live in that area in terms of what we're trying to do with those properties. And sometimes you can look for clues as well if you're looking for areas where there's a lot of investment happening, and you start seeing some of the big companies starting to move into those areas. You know, you're like your Starbucks, your Pizza Express. Right now is probably not a good example with the pandemic and what's happening. But generally speaking, you know, when you start seeing Starbucks popping up and Waitrose stores in an area, you can see that's an up and coming area. There's likely to be good capital growth in those type of areas. So, you know, income is a key part, the level of employment. Crime rate is another thing. What's the level of crime in that particular area? Overall, you want to look at how the property prices have moved, who the big employers are in those areas. Is a lot of industry dependent, a lot of people dependent on a certain type of industry. And if that industry was to change, what's going to happen? Like, for example, in Birmingham, we used to have the Rover factory, the car manufacturer. It's a massive employer in the south of Birmingham. And after that closed, you know, you had quite high unemployment, but slowly they're starting to improve the areas, a lot of money going in. They're opening business parks in there. So you can see that over time, this will improve and this will recover. But it goes through a phase where there is a struggle, where actually there is high unemployment. And it's, what's your plan with that property? Do you want to sit on it for the longer term to ride through and benefit from that growth as it happens? Or are you looking to really add some value and sell that property on quickly? If you are, you want the affluent areas where it's the kind of places, the way I describe it, where people want to go and move into, as opposed to the areas people want to move out of. And so when you think of it from that point of view and you collate all this data together, you'll get a very good picture of the sort of areas that you're looking at. So let's get our next question up on the screen. Inoxi, my apologies for my terrible pronunciation. I know I've attempted to pronounce your name previously as well. Hi, Saj, this is on YouTube. Do you think coronavirus has affected the HMO market negatively? What is the occupancy rate at the moment? So I think it has had an impact. I think it has affected the market. You know, it hasn't had a massively negative impact, but it certainly has impacted the market. So let's talk about what I mean there. Now, first of all, there's less people moving within the sector because with the lockdowns and everything else that's happening, it means there's just less movement. So if you've got voids or rooms that are available, it means it's taking longer to move them, because right now people aren't moving unless they absolutely necessarily need to as well. And that's the government advice as well. So even though letting agents are operating, really the only people that should be moving are those that really need to move. Then you've got to look at with the way the virus is spreading right now, do people want to be in shared facilities, or would they really have their own space? Do they really want to be sharing a kitchen with 6 other people? Is that what they want to be doing? And 6 other people they're not related to and they don't know often as well. So, you know, these are the things that have an impact. I think the market will change again. I think there's always room in the market for HMOs. And remember, there's lots of different categories of HMOs. So even when we talk about working professionals, as the vast majority of people like to be in that market, and that's our market, but even within that, there's niches. So you've got people, what we call blue collar, white collar, you've got the very high earners. So we've got the quality houses where we charge a premium because the location's right, the size of the rooms in terms of what they get in those rooms. You know, they will always there'll always be a market for those. So as the market evolves and changes and adapts, we just have to change and adapt with it as well. So in short, yes, I think it has had an impact. I think it's short term. I think we'll evolve through it. So our next question is from Iram on LinkedIn. I'm purchasing a property which has potential to build a small dwelling in the back garden, accessible from the road at the back. Any advice on building a small bungalow, or advice on how to approach a neighbour to negotiate to buy a plot to include in the new build? So Iram, a few things there. Essentially what we're talking about here is backland development, where we're looking to build something in the back which doesn't exist at the moment. There's no other properties are already there. None of the neighbours have this. This is the first time you're going to do this. Even though it physically looks like you can build it and you've got access from the side road, it doesn't mean it will be easy to be able to do. And the other bit that you mentioned there is you're probably going to need some space from your neighbour as well in terms of their garden to be able to make this whole thing work. So with the neighbour, first of all, you want to approach them and have a chat with them about, you know, what their view is in terms of their garden. Is there something they'd be considering giving up part of the garden? Sometimes some houses have huge gardens and it can be a hassle looking after them. So, selling that garden off for 10 or 15,000 pounds or whatever it might be, is a godsend for the owner of the property. Other times it could be that's what makes that property stunning, because it's a beautiful long garden or whatever it might be, and they don't necessarily want to let that go. So you need to understand where the owner of that garden space is, what their thinking is, what their aspirations are, what they want to see happen, how long they're planning to stay there. It may even be a tenanted property, in which case the landlord may be open to selling. It might even be owned by somebody who's quite switched on in terms of understands the value that has to your plot. By selling it to you, it makes yours worth significantly more. They might want to be cut into the deal as well. So that's your first stage, is really just talking to the neighbor, because you need that plot to make it work. The second thing I would do is I'd have a chat initially with the planning consultant to get them to look at it and assess it to see how viable it could be. Now, all this is going to cost you a little bit of money, but it means you can save a lot of headache and pain if it's non-starter, if it means it's not going to work. And then they might even be able to give you a guide in terms of the risks involved, in the sense that what's the likelihood of this getting approved to be able to build on? What's the percentage chances? Is it you got a 50% chance? You got 70, 80, 90% chance of this being successful? And let's say it's a 50 or 40% chance. That means, they're not massively confident that we're going to be able to get this through. You're still going to have to spend quite a bit of money on the drawings, on fees and things, to be able to get to a point to get a decision from the planners, and that might not even be the one that you ultimately wanted. So I think a really good planning consultant is worth their weight in gold. They can give you that guidance. Planning is really an area of law, and it's having experts in that area of law who really understand it. Now, often it's not the architect. With all due respect to the architects, their skill is in designing and the creativity, not in law. So this is where a planning consultant can really add value and guide you through what you might be able to achieve and what you might not be able to achieve on that particular plot. So I hope that helps with that. So our next question is from Maria on LinkedIn. Do you feel that the conveyancing process needs to be reformed to avoid all the unnecessary fall through and expenses? Yes, I completely agree. I think conveyancing is an absolute nightmare in terms of the process, at the speed it works at. If you just think about, there's many factors that affect the speed of conveyancing. It's not just one thing. There's many different factors. But when your solicitor prices you up to do, say, a purchase of a property for you, they'll price you up a few £100, £1,000, whatever it might be, that sort of ballpark. And if you think, how much does a solicitor typically charge for their time, £200 or an hour or something like that? They've really priced you for maybe 4 or 5 hours of work to be able to deal with this conveyance process for you. So when the files are picked up and put down, and they're not on it every day, every 5 minutes, they do it in little batches. They look at it and they review it, and then they might send off some emails, or in some cases still write letters to be able to get a response from the other side, or queries addressed with. And then it moves along very slowly, but it doesn't really need to be. We've done cash purchases within a week. It can be done, and the reason it can be done, because it is there. It is the ability to do it is there, but the appetite isn't necessarily there. So you pay significantly more to the solicitors to be able to prioritize what we're doing. We'll have insurance indemnity policies, which means we're not waiting on searches, which can take longer, and we're not necessarily using a bank, a lender who's going to have certain stipulation requirements or all that need to be considered. But there's so many things that can be reduced to make this process easier. I remember there's a thing called a HIP pack that happened many years ago when the EPC was produced, which meant that a lot of the searches information was all collated together along with EPC, handed over by the seller to the buyer, which means they could speed up that process. But of course, before it was launched, it was dropped, and it never really took off, and it was just the EPC part that moved along. And if you look at the Scottish system, for example, that's completely different. Once you put your offer in, if it's accepted, it's legally binding. Whereas here, it could drag on for 3 months or 4 months. I mean, right now with the snail's pace everything's going at, it could take even longer. And by the time you get to completion, if you've got a buyer on the property, it's dragged on for 4 months. At the last minute, they could still back out, and you're back to square one and you have to start again. So yes, it is frustrating, but I think we just got to work with what we've got by understanding it. And I think reform is coming. There'll be more stuff that will go to digital methods as well, in terms of how things are done, rather than the way we do things right now. And I think blockchain will completely change the system as well from what's happening right now as well. So just a few thoughts there. So we'll get one more question up on here. Just before we do Dilip's question, if you're enjoying this content, remember I'm here every Monday at 8:30 p.m. to answer your questions around property investing. We're live on various different platforms on Facebook, YouTube, LinkedIn, Instagram, Twitter. And also I've got the content on the YouTube channel, which is 3 videos a week to ultimately help you get further faster in your property investing journey. Just reach out if we can help in any particular way. There's 2 key ways that I can help. One is to teach you what I do so you can do this for yourself, really in the shape of mentoring and guidance in that way. And the other way we can help, if you're looking to invest and you're looking to have some way to invest with, that's the other way that I can help you. It tends to be a minimum £50,000. If either learning from me or investing with me is something that's of interest, just reach out to me, private message me on whichever platform you're on, and then we'll see if we can help you with that. So let's get our last question up from this evening. This is from Dilip on YouTube. Hi Saj, what do you think of the rent to buy and rent to own markets? I think the concept is really good, Dilip, in terms of rent to buy, which is where you're renting a property for a period of time with a view to purchasing it. But I don't think the legal structures are there to be able to facilitate and make it very easy. And sometimes, these transactions, I've put together a couple of transactions like this years ago in the way of lease options, where we take on a property from somebody else and we offer it for somebody else to buy it. We sit in the middle of that transaction, but it can get quite messy, and to make it work is not been so easy. I've done quite a lot of lease option contracts, about 30 plus, but in terms of tenant buyer, which is essentially what this is, which is a rent to own, where somebody rents the property for a period of time with a view to purchasing in the future, it can get quite messy and difficult. I think there isn't enough legal structure to really make it work really well. If you're doing a small volume of these deals, as the person putting them together and offering them, I think it can work really well. But I think it probably needs a lot more structure legally to make it safe and viable for everybody involved. So look, it just leaves me to say thank you so much for spending your half hour with me this evening on Monday. Remember, we'll be back here next Monday, when I look forward to seeing you again. Thanks so much. And if you're watching on Instagram as well, thank you so much for your time, and I look forward to seeing you next week.